Scott Bessent just told you something terrifying. He said there's no price tag that will make the Iran war unaffordable. Think about that. Last month, the US government brought in $313 billion. Sounds like a lot. Until you realize they spent $621 billion. That's a $308 billion deficit in 1 month. The deficit over the past 6 months is $1 trillion. So if I'm reading this right, this means that the printer is the budget. And if I'm reading between the lines correctly, we may be watching this setup for the next major printing cycle happening in real time. This war in Iran isn't about missiles. It isn't about oil. This is about whether the United States can still fund itself without breaking the Treasury market. And if the Treasury market breaks, America doesn't cut, they print. In this episode, I'm going to share exactly why America's in trouble, how the Iran war may be the event that forces the US into Bitcoin. The whales are loading up. Bitcoin treasury companies, central banks, billionaires, they realize that like the Strait of Hormuz, Bitcoin is the only path of global escape. This is Dante Cook with Bitcoin Simply. Let's go.
You can take Iran's oil offline and Russia has all the power because now you can't take it. You got to have Russia running full out. You can take Russia offline and control Iran. But again, if you fight with either of them, you're going to blow up the oil market. When you blow up the oil market, you're going to blow up the Treasury market. You blow up the Treasury market, you're going to blow up the government's ability to fund itself.
This clip is the entire game. If you missed what he said, let me break it down for you. If you pick a fight with Iran, you blow up the oil market. If you blow up the oil market, you blow up the Treasury market. If you blow up treasuries, you blow the government's ability to fund itself. That's not a theory, that's the chain reaction. And right now, all three dominoes are wobbling at the same time. While the whole world is watching the Strait of Hormuz, the narrow waterway in the Persian Gulf that every barrel of oil in the region has to pass through, I want you to think about something different. Bitcoin being the Strait of Hormuz for freedom money.
We're talking about the Strait of Hormuz at the center right now of geopolitics. And I think in some sense, it is really interesting to imagine that Bitcoin is perhaps also the Strait of Hormuz for what free money can mean. What I mean by that is if you think the Persian Gulf, the Arabian Gulf is kind of where the money system exists today in compliance across the ecosystems of the players that can traffic in that Gulf. The Strait of Hormuz represents the only path in which you can escape towards the Indian Ocean, where freedom is and unlimited access. And if Bitcoin is that conduit that allows money to go from the compliant level in which we play to freedom money that is censorship resistant and totally permissionless, one may imagine Bitcoin is actually the Strait of Hormuz of freedom money.
Bitcoin is the only neutral, permissionless exit for money anywhere on this planet. No government controls it, no bank can shut it down. And the billionaires and the big money already know this. This is why last week, we saw the first central bank in Kazakhstan make plans to start to buy and own Bitcoin on their balance sheet. They're not buying oil, and they aren't the only insiders positioning themselves in Bitcoin. Anthony Scaramucci, the former White House communications director, a guy who's seen the inside of power, just went on Patrick David Bett's podcast and said something that should stop you in your tracks.
Hey, where are you at with it, Anthony?
Well, listen, it's my largest position by far. I've added to the position recently in the correction. I do believe that Bitcoin is going to be a big operating layer like your former guest, Michael Saylor, who wrote the foreword to my book about Bitcoin. And I'll just say two quick things. When we move into agentic AI and a computer is not, for regulatory reasons, able to open up a bank account somewhere, guess what the computer is going to do? It's going to figure out a way to trade on the blockchain and use things like Bitcoin. And so don't underestimate the power of this. Moreover, in a decentralized society where we're losing our trust in fiat currencies, I think Bitcoin as a store of value or a potential layer of value that we transact with is going higher. And it's a very limited supply. And forget about you and me. I'm talking about kids that are my kids' ages. As they go 10 years from now, 20 years from now, and they start running the big money, this is going to be a very big asset. So is it a $35 trillion asset like gold, trading at $1.5 trillion right now? I believe it is. Could it take 15 years to get there? Probably.
35, so you think it can 20x where it's at right now?
I do. I think it's going to be the market capitalization of gold, but I think it's going to take 15 years to get there. It's not going to happen overnight.
Bitcoin is his biggest position by far, and he's adding to it. He sees Bitcoin reaching $35 trillion. Not right now, but over time. And that's a 20x from today. And he's saying something very important about the floor of Bitcoin's price right now that everyone is neglecting while they're panicking.
Right. Right. You see Michael Saylor and them, they just bought another 1.3 billion. I don't know what the number was.
1.3 billion. He's single-handedly propping up Bitcoin during this bear market, and he's set up now to buy, another 10 to 20,000 Bitcoin at a clip every quarter. He's buying more than the mine supply of Bitcoin right now. Okay, so 450 Bitcoins are coming out of the network, and Michael's buying roughly about 600 a day. Just to give you a sense for what he's doing.
They got to do blood work on this guy. They got to do blood work on this guy to see if it's ice cold or, where is it at? I mean, is he that ice cold?
I watched your interview with him. I guess the only thing I would, and not to overly simplify the interview, but Michael is in the software business. And Michael tried to compete against Microsoft and lost. And he now sees this as the operating software for the future of money. And so he didn't make it, but he wants to own it because he thinks that's where
Michael Saylor, MicroStrategy or strategy, STRC, that is the floor right now during this bear market. Let me give you the stretch numbers from this week. Yesterday alone, it's estimated that they bought over 4,000 Bitcoin, about $1 billion worth, nearly double their previous record. It's estimated they bought over 11,000 Bitcoin this week. Trading volume hit 471% of their daily average. And there's been 9 days straight of ATM activity. It's getting so crazy now that we even have Bitcoin Treasury companies buying this asset as a part of their reserve. Orange BTC in Brazil just added Stretch as part of its Bitcoin Treasury Reserve strategy. And here's the stat the financial mainstream media won't tell you. STRC's Sharpe ratio, the measure of risk-adjusted return, is 3.5, higher than gold, higher than the QQQ, higher than the S&P 500. The best risk-adjusted asset in the market right now isn't a tech stock. It isn't bonds. It's a company that does nothing but buy Bitcoin. Before we go any further, let's thank our sponsors. Ledn has been the leader in Bitcoin-backed loans, allowing you to borrow against your Bitcoin stack without selling your Bitcoin stack. Borrow up to 50% loan to value of your Bitcoin holdings in just 6 hours. If you post $2,000 in Bitcoin collateral, you can get a $1,000 loan. The application takes just 2 minutes, and your Bitcoin isn't rehypothecated or lent out to anyone else. It's a simple process. Either you have the Bitcoin or you don't. Rates start at just 12.4%, and you can get 0.25% off by using the code at learn.ledn.io/simply. Don't sell your Bitcoin. The Bitcoin way? Well, their team is not only going to help you not sell your Bitcoin, but they're going to help you become sovereign over your Bitcoin. They're going to help you to learn how to hold your private keys, run your own node, and do it safely, securely, and privately. Schedule a free 30-minute meeting with their team at thebitcoinway.com/Dante. Back to the show. Guess what the $5 billion asset manager Bitwise just told CNBC?
As the ETFs came to market and gave regulatory clarity around the custody of Bitcoin, which is the single biggest thing when you're managing other people's money, you can't hold the assets yourself. And so the ETFs unlocked that functionality for fiduciaries. And there's been a trend of, individuals selling their coins to the ETFs. And we're seeing more pension funds, more endowments. Last week, the first central bank to buy Bitcoin, the Central Bank of Kazakhstan, announced that they'll be adding Bitcoin and digital assets. That really gets to my point about this intersection between the energy and electricity markets and the Bitcoin markets. Kazakhstan, famously sitting on huge reserves of nuclear power and electricity. So it's natural, we think, for them to adopt Bitcoin. There's a dozen countries like that are mining Bitcoin, at the government level, and we expect that to proliferate.
Amazing. It's all the intersection of everything.
The next wave of demand is here. Central banks are buying Bitcoin. Dozens of governments are mining Bitcoin. The wave of new demand in Bitcoin won't just be from retail. It'll be sovereign and it'll be institutional. And you know why this is a certainty? Because on the same exact day, the CEO of the $25 trillion U.S. banking industry stood up and called Bitcoin a threat. They declared war on the Bitcoin market structure bill. And it's not a warning, it's a confession.
Let me reiterate something right up top. Our industry welcomes competition and innovation, and many banks are eager to offer products and services in the digital asset marketplace. What we don't support is an uneven playing field where new entrants want to offer bank-like products without having to comply with bank-like rules. Or even worse, push for a regulatory framework that puts consumers, the financial system, and the economy at risk. We can't let that happen.
When the most powerful banking lobby in the world says we can't let that happen, it means something is already happening and they're scared. It's scared because their profit center's collapsing while the Treasury market is in shambles and the oil market is showing that this war is going to be prolonged. Vincent Daniel, one of the investors from The Big Short, who shorted the 2008 housing market, explains exactly what happens next with war, AI, geopolitical crisis. He says that it's going to cause a 50% drawdown in stocks, which, oh, by the way, fell 1.5% yesterday. The 6th daily decline, it's done more than 1% just this year alone. But he says the quiet part out loud. The government's not going to let the market crash. They never do.
I think the question, what you're really asking me, is there any way we can do this without the S&P going down 50%? That's what you're asking me.
It's also a good question.
The answer is no. Okay. So I don't have, if we had a way or a means to do that, we would have done it already. So the only way to alleviate the issues is by printing money. If the minute you allow price discovery of any kind, the S&P is going down a lot.
What do you mean if you allow price discovery?
I'll give an example. Let's say price discovery is the reality that something is allowed to go down, which is supposed to happen in a capitalist system. Okay. Let's just say software is going to be a material problem, right? Because of AI. And let's just say all these, I'm actually probably rewriting Citrini's note, right? Let's just say all these software companies go down another 60, 70%. And let's say all these private software companies, right, which are funded by private equity, can't pay their bills. And all of a sudden the default rates go up, right? And the S&P drops. NVIDIA drops. There's no capital coming in the door. What are you going to do? What is everyone going to do? And again, I want to tell the audience, I'm not predicting this. You asked the question, I'm answering it, right? If the markets were to go down 40, 60%, and this is where I think Citrini might be off, is what is the government response, right? And if price discovery is the government says, caveat emptor, buyer beware, sorry, right? Let's find where the right place is where unlevered buyers go out and buy this stuff. But that's not acceptable anymore.
Before I let you go, let me leave you with something interesting. It's Friday the 13th. And you know what's actually scarier than Friday the 13th? March the 12th. 6 years ago today, on March 12th of 2020, the market was a sea of red. It was in shambles. Every major stock was down double digits in this single session. People were terrified and they were selling everything. And then the printer turned on. Everything ripped back and some, the K-shaped economy. And we all know what came next. And so as we look at 2025, gold is up 55%. Bitcoin's down 9%. Some people are using this time period to call the thesis broken. But if you look at the 14-year chart, Bitcoin has outperformed gold and everything else by a meaningful margin. And it tends to outperform even more when the money printer comes on and money and liquidity have no other place to go. Hal Finney wrote this in 2011, and I think it's pertinent today. Every day that goes by and Bitcoin hasn't collapsed due to legal or technical problems, that brings new information to the market. It increases the chance of Bitcoin's eventual success and justifies a higher price. The printer is about to turn on, and Bitcoin isn't failing anytime soon. It is the Strait of Hormuz for freedom money, as Jeff Park puts it. The US government has nowhere to go, and this Iran war isn't about missiles or oil. It's about whether the United States government can continue to fund itself, which it always has done through treasuries. There needs to be an escape valve, and that's Bitcoin. This is Dante Cook with Bitcoin Simply. Happy stacking. And if you've already done the work of trying to understand the Bitcoin network and you believe in stacking Bitcoin, we'll diversify the ways that you do stack Bitcoin, not just by buying spot Bitcoin or dollar cost averaging or backing up the truck when Bitcoin dips. You can buy it consistently through Bitcoin mining. Oh, but not mining yourself, outsourcing it to a team of experts at SAS Mining who will help you pick the best machines, leading state-of-the-art machines with the best electricity rates. They're going to maintain the machines and send sats directly to your wallet. Get started by using the QR code on the screen today. Happy Friday. We're out.